All right, guys, welcome back to the channel. It is your boy KEO. And yes, today we are doing a case study review today on the ES Mini 500, aka the S&P 500. So yeah, today I'm just basically doing an overview of the trade that I took. We can actually go ahead and just kind of show you the executions real quick, just mainly because, I want to show you guys where I actually got in and where I exited my position, right? So you guys can see this is the trade idea and this is how it played out. But let me get this. Go to trading and we'll go to execution, right? So boom. Now I'm gonna show you guys where I got in. So you guys can see I got in right here, and then my execution was right here. Granted, I could have held right here for the overall TP, but for me, this was just kind of like a safe, easy target because for the way I like to trade, as far as I know, this is just another area of liquidity where price could have a reaction back to the downside. So me, this was just a safe TP, really good, easy target for me to just, get in, get out, take what I needed from the markets. And granted, at that make over 1% today on my account. So with that being said, this is the executions, took the safe TP right here, overall full TP played out. And yeah, I'm going to go ahead and run through this play on how we got today set up. So before I get into any market technicals, I personally like to look at the fundamentals review and see, where everything's sitting as far as like, okay, where's the overall bias in the markets? So I personally like to go visit this page right here, the commitment of traders, where it will, of course, pull up all the fundamentals as far as like, okay, what's the retail bias? Where's the majority trading here? So as I sign into this, you guys can use your Google accounts to sign into this very easy. Probs. Right here, looking at this chart right here, you guys know that I'm trading the S&P 500. So right here, looking at the majority of traders. So the minis, most of the institutional retail traders are going to be, trading these two, right? So primarily, they're going to be trading the minis for institutional players, and the majority is most likely going to be trading micros when it comes to lot volume, meaning live liquidity. So yeah, you can see right here, the majority are short in the markets right here. And as for the minis, you can see the majority is long, but again, this is more of an institutional outlook on positions. Uh, so yeah, institutional players are typically trading with S&P 500. So I just kind of look at it like, okay, banks and institutions are wanting to go long. Majority of retail traders are looking to go short. So it just made sense for me to look for longs, right? Going over to the next thing that I look at the heat maps to see where the fundamentals of all the companies are resting, seeing if they're bullish or if they're bearish. And today's case happened to be bullish. You guys can see very, very green, uh, with the exception of Apple, Tesla, and a few other smaller companies. But you guys can see fairly green, meaning, okay, bullish fundamentals. Majority of people are short. I typically want to do the opposite, so I'm looking for longs. And yeah, honestly, just kind of looking back at the day prior to this, I'm going to go back over to my dirty charts over here that I had marked up. So right here, we have this 4 hour fair value gap, which was actually a point of interest that I wanted to see price come into yesterday. Granted, we did have some areas where we could have got some long positions, but no positions were taken yesterday as it was payday and inauguration day. But nonetheless, I'm going to pull up this time frame alignment just to show you guys what I mean. So if you guys know how I trade and the way I view market structure, all you really need is two candlesticks, right? So two candlesticks is practically all you need to confirm a high or a low, and preferably consecutive candles, right? So in this case, we are looking at this 4 hour fair value gap, which to me would be considered a point of interest, right? So as price came down into our point of interest, this is where we want to see a reaction in the market. So expecting a reaction out of the markets, what time frame do we want to align ourselves up with order flow? Well, if we look over here at our chart, it says if we are in a 4 hour point of interest, we want to look for 15-minute price action. So right over here, looking at the 15-minute, we came down into this 4 hour position and we get all these bullish candles. I have them, marked up dark for the bearish candles, the lighter grays for the bullish, just mainly for psychology reasons. But nonetheless, we get all these bullish candles, and then we get what? We get two consecutive bearish candles. So right here, boom, we have a confirmed low because we get the two bullish candles after this long run into this area of interest. And then we have this high right here that is created. We get two consecutive bearish candles, which you can see price kind of comes down here, and we create this short-term low. Now, granted, price has came up, but we did not move with speed as I would like to see if we are going to be shifting a market structure, right? So yes, this is a shift in market structure, but this is not a significant or strong move in market structure, meaning, yes, we can create this high right here as we shifted over, right? So let me move this up. So boom, you can see price has shifted on the 15-minute. Was it a strong shift? No, because there's no displacement, right? There was no gap. Like you can see over here, this very large candle, it has a gap in between, right? So this was our Asian session range at that. So after we shifted, after the Asian session into the London session, we can see right here, what happens in London tends to happen in New York, right? So yes, we're looking at it from hindsight, but just to show you guys, price has shifted from the 15-minute perspective. And granted, we didn't get the displacement we wanted, making this liable as a high that isn't highly probable to hold, meaning that this low is also possible to get ran, right? There's a high probability of this low getting ran right here, this low getting ran right here. Why? Because there's no displacement. This isn't a strong enough low. So price could even potentially dip down to this London low before we wanted to see price come a bit higher, right? So keeping all that in mind, I'm gonna go back to the minis charts and just kind of show you guys how we got today's setup. So boom, we're gonna get a little bit of pre-market action going on. You guys can see I have this indicator already marking up my session highs and lows because I like to look for my key areas of liquidity, which rest at session highs and lows and daily highs and lows. That goes for weekly, monthlies, so on and so forth. But yeah, previous day's high, right? Easily mark this up. Obvious high, right? Obvious target for liquidity. And then we're going to mark up the previous day's low. Again, obvious low. Obvious target for liquidity, right? So the name of the game for us is we are looking to target liquidity, right? So liquidity for us is essentially money. So when we are looking at the markets, we are looking to take out the majority, right? We are thinking in terms of moving with the order flow of the banks and institutions who have the capital to push and move the markets, right? So if we know that they are looking to target liquidity, aka stop losses. That's typically what we want to have as our targets. Okay. So when it comes to stop losses, this is what we are aiming for. That or it could be gaps, but we're not going to get too technical because we are just reviewing today. So yeah, previous day's high, previous day's low. Let me see. London session low right here. And this would just mark up London session high. So boom. As I said before, what happens in London tends to happen in New York. So we can see London was fairly bullish. And again, we shifted from that 4-hour point of interest where I wanted to take longs, but I wasn't super confident in the shift. As you guys can see, this price did come back down here and retest this area. But because this wasn't a strong enough shift, this low right here is also liable to get ran. Right. So this is also a short-term low that can also get ran. Sometimes we can also see price retest our areas where we are looking to enter. There's been a lot of times I can tell you where I've entered a trade and sniper entry, right? Price is pushing up, pushing away, looking like it's going to keep running. And then all in all, just for price to come back and do this, come back down to your entry. If I'm already break even, stop me break even and then continue in the direction. So that's happened to me plenty of times. So keeping that in mind, price is always likely to retest your entry. So never FOMO. Don't get scared. Just if the setup is there, trust in your setup, trust in your entry, and most importantly, trust in yourself. So, with that being said, let me keep that here for an area of interest of where I would like to see potential longs if I am looking to long in the market. So if you guys are in the Fowler 500, you did get this message today on the three areas of where I was looking at to potentially get some long entries at. So I had three areas right here. This was the pre-market lows prior to the 9:30 market open, which I will mark this up. Boom. And if you guys know me, I typically don't even start trading until like the 10 o'clock time, Eastern time. Well, me, I'm on Central, so 9 o'clock my time. But, you know, for the purposes of teaching, I'm teaching off of strictly Eastern time because that's how I was taught via learning ICT. Yeah, getting back to it. These were three areas of interest that I was looking for price to come back and retest. So I was looking for price to come back and retest either this London low and come back up to this high. And I was also looking for price to come back down to this area after reaction back to the high, or even just down to this pre-market low, right? So I had three areas of interest where I was looking for the markets to not only target, but to give me an area of reaction where I can look for a long, because as you guys know, my bias is long. So whenever I'm looking for a trade, I'm sticking to my bias, whether I am bearish or bullish, I'm sticking to one bias and one bias only. Yes, can catch trades on both sides of the markets. Now, am I going to tell you to play both sides? That's really up to you. But here, when it comes to trading, it is more than likely that you'll get screwed, trying to trade both sides of the market if you don't know what you're doing and if you don't know what you're looking for, right? So again, when we're trading, we know what we're looking for. We have clear targets that we are aiming for, and we have clear areas of interest where we are looking to get in and see some sort of reaction and price action, right? So these were my three areas of interest. I'm going to go ahead and mark up another few things, such as some quarter levels. We'll mark this up. So you can kind of look at these as institutional levels in a sense, places of support and resistance where, price may want to target and again have another potential area of reaction. Okay. So you can do it in quarters. So like we would do 60-50, in this case right here, 60-75. And even if we think price could, potentially target up here, yes, price could potentially target up here, right? But we're going with the small, short, easy targets just because, again, the name of the game is making money, staying in the game as long as we can. Right? So I'm just going to go ahead and mark up some more of these highs, mainly because these, again, are again, reactional areas in the market. Okay. So you guys see, I just did all of this on the 15-minute time frame. So if you want to do all your markups this way, do it this way. Right. And this needs to be marked up as well. So boom. You got all these different areas of interest we can mark up. Let's even mark up this area 60-25. So boom, from a higher time frame bias, right? We're already bullish on a higher time frame perspective. We came into that 4-hour POI. We shifted on the 15-minute, right? So essentially, we just want to see, okay, how is price going to continue bullish, right? So the only way for price to continue bullish is if we come back down and take out sell side liquidity, areas where we can find a reaction that can eventually slingshot us back into the other direction. Okay. So higher time frame bullish, technicals bullish, fundamentals bullish, bias is bullish. Okay. So let's go down to the 5-minute. Let's see what's up. So, let's go 5 minutes before market open. Let's go ahead and mark this up. Pre-market high. All right. So 1 minute prior to open. So I'm looking for bulls, and I'm going to walk you through exactly how I got my trading set up today for the longs. So boom, market opens, And typically, after the markets open, the first thing I'm looking for is, okay, did we hit liquidity and did we make a fair value gap, right? So markets open, boom, no gap has been created after market open. I'm not looking for volume imbalances. I'm looking for a very clear fair value gap. And right here is where we get our first. Right. So boom, already in my head, this is what I'm thinking. Price is coming down. I see this gap. Yes, there is the potential for me to catch a short. Why could I think short from this position? I could think short because, oh, well, we broke, the structural low right here. And we also have a gap. Well, I also want to see if there's a gap that's created in here. So I'm not going to just take the short off rip just because I see us clear liquidity and, close this structure. I want to see price really confirm. So I need more than just these two confluences. Me, I'm the confluence king when it comes to looking for confirmations in the markets, right? I'm, I don't need just one. I don't need two. I need a plethora. I need a multitude of confirmations to give me the ultimate confidence to say, okay, I'm going to press the button and this is what it is. You know what I'm saying? So you need a lot of confirmations to really give you those insights to, okay, let's make this happen. Let's press this button and let's make this trade work, right? So boom, right here, I can see again, I'm thinking unicorn model, right? But again, the way I trade, I don't even trade the first 15, let alone the first 30 minutes of market open. So this right here is the 10 minutes. So really this first, you know, kind of few minutes after markets open is all manipulation. So you can see markets open, we manipulated this high. I'm assuming we're probably going to go low and target this low, right? So boom. You don't even get the chance to enter the shorts right here to get to this low. But now that we've taken out this low, we're essentially just looking at price for what it is. Okay, so are we going to get this reaction right here for price to go bullish? Because again, we are looking for long. So it doesn't make sense for me to look for shorts right here, right? So getting all this off the screen. Essentially what I'm doing is now I'm looking for my confirmations. We get one, two candles, bullish candles. Right? So this is a confirmed low. This is the last confirmed high, right? There is the possibility for this high to get ran. So I'm keeping this in mind. I'm not looking for shorts. I know sellers are looking to get taken out today. As you guys can see right here, that would have failed. Now, keeping all this in mind, keeping this first fair value gap, let's mark this up. As this can act as an area of support and resistance, you want to really see how price closes through. So you can see we've opened it, we've closed it, and now there's a gap in between. So now let's see how price reacts. So ideally, if we're going to go long, I want to see price come down to this gap. I want to see it push higher, but I want to see speed. And then I want to see the candles closing, and then I will want to see a retest to see a continuation. But let's see how price plays out, right? So boom, we don't get the two consecutive candles. So boom, right there. Now we have this as a confirmed high. You guys can see price just deciding to manipulate people on both sides of the markets today. You see these other areas right here, these highs right here getting ran, having reactions to what? The opposite side, because this is what price does. There are these significant highs and lows, and it slingshots to the other side to take out liquidity to the other side, just to do the same play over and over and over. So we got a confirmed high, we got a low. This low is just now broken. So let's see what price wants to do. We don't get the two. Boom. All right, so we get two candles right here, two bullish candles, bullish candle right here. We don't get them consecutive, but this bullish candle ends up closing over here. So this confirms this as a low right here. I'm gonna just walk you guys through price action rounds, all right? Because really, the wicks are just doing the damage, right? The bodies are telling the story. Okay, so just remember that. Um, All right, we can see price is doing what now? We are past this 10 o'clock time. So this is now that time where I'm looking to pull the trigger, right? I'm in that time period where it's like, okay, it's money time, it's go time. All the manipulation has happened, as you can see, right after market open. This is nothing out of the normal. You typically see manipulation to both sides of the markets until it's ready to balance itself. So keeping that in mind, we just hit again what this other short-term low, which would have been the re-entry of that shift in structure on that higher time frame. Again, price is always liable to retest your entry. Okay. So depending on where price is, pay attention to market structure. And you'll be able to know when to move your stop loss up and when to break even. Okay. So this is one of those situations where if you weren't paying attention to how price was closing, then yeah, you were more likely to get broken even if you broke even way too soon. Okay. So boom, we had another area of interest. And right here, I'm gonna note what I get the pool of money, right? So we got a high right here. We got a high right there, and there. So put another money symbol up right there. Okay. So if these highs are looked at as liquidity, right? What do you think I'm thinking? Well, I'm thinking that price is possibly going to go back up here and take out these highs and lows, these highs right here, right, that are left behind. So now that I have my bias, I'm bullish. We've seen how price has manipulated people at, market open. Okay. And now we are at an area of an interest, right? Okay. So again, watching the same thing play out. I'm looking for two candles. So boom, we get two candles right here. So I'm watching how price plays out. Price continuing to push. Still haven't pulled back quite yet. All right. So again, the bodies are telling the story. You see, we got this one bearish candle. We didn't get a consecutive bearish candle, but what did this next bearish candle do? It closed below the wick of this bearish candle. So this is showing us those two consecutive. You can look at this now as this high. Boom. If we really want to see price go bullish from here, now that we've kind of confirmed a high, I want to see another bullish candle. Do we get it? No, we do not. All right. So right here, we get our legs, right? So boom, this is now a confirmed low. And now we got this aiming to potentially make another high. So essentially, right here, I'm watching how price begins to close, right? Well, now we got the low that was taken out. We got a strong rejection. We got the bearish candles to the downside, confirming this as a low and this as a short-term high. And now we're getting that next leg closing higher. All right. Let's see how price closes. So one thing that I'm noticing right here primarily is what do we have? We have a gap. And within that gap, we also have this shift in structure. And basically, this is where I was looking to get my trade in. I wanted to go to contracts deep, but because this is a new funded account that I've started, I wanted to make sure that I was minimizing my risk, but also making sure I maximized the reward. So with that being said, right here, boom, very easy, very easy target. This is a 2-to-1 risk to reward right here. Obviously, this would have been a very bad risk reward. But overall, I knew my overall target would be this previous day as high. Why? Because price was already kind of gravitating there. London session kind of showed us we were bullish. Technicals have been bullish, and now we've entered an area where we're kind of getting that push back now towards the top side, where we have all these dollar signs resting, right? So with that being said, after I saw this, I was like, okay, we're still within this 10 o'clock window. We're about to hit 10:30, which is a time of interest, right? So these specific times, we know that the markets are going to move, right? So round numbers, like about every 15 minutes, you got your different macros. but not going too much in depth in that. This is where I got my entry. This is where I sent my entry to the Fowler 500. Now, granted, I wanted to see more speed and volume to the top side, so I knew that, again, this low was very liable to get ran before pushing higher. But anyways, this is what I had risked, and this is where I decided to enter. So boom, we're just going to enter right there. That reason. As we can see, price started moving up. And realistically, at this point, I wanted to see price kind of shoot up a little bit higher and close above. But as you guys can see, price is just kind of rolling around. It's not really moving that much. So keeping all that in mind, because we're not really getting that speed and that volume, that's also making that this low right here very liable to get ran before a price even decides it wants to continue to the top side. Overall, we're still going to trust that this low was the low of the day, primarily because, again, we got that volume where it's the downside attacking this area of liquidity, and then we got a quick move back to the top side. So option price. Just really kind of playing the waiting game. As you guys can see right here, as I mentioned, because the volume was lackluster, liquidity was more than likely to get ran right here. So you guys can see right here, this low was taken out. But again, at this point, I'm still holding my trade. My target is still at the highs, and my stop loss is right here. Primarily because I'm looking at it as like, okay, if this low gets ran, we're more than likely to run this low over here. So you guys can see, lackluster low gets ran. This price eventually makes its way around this time. I'm giving it until the end of the macro, which is from 10:50 to 11:10. I'm giving it this entire period basically to start making some kind of bullish movement towards the top side. And considering that we got all these highs that are just kind of building up, I'm like, all right, well, this essentially to me looks like a pool of money. So to the banks and institutions, they're more than likely to just pump it up and run through all of these lows or all of these highs, just because, again, a lot of retail stop losses are resting above right here. So as time goes on, and as we near the end of the macro, you guys can see volume starts to step in towards the end of the macro, giving me more breathing room to say, okay, well, price is more than likely to continue to the top side, continue to hold. And as price made its way back down here, I never broke even at this point, but I did move my stop loss up to this low again because this was a low that was ran over here. So this is a protected low. And if we were to run a slow, more than likely to just continue running bearish. So at this point, stop loss was here. And once we run this high up here, I basically am looking to break even. And as we break this high, I broke even. And as you guys can see, we get very close to this high right here. And because the volume's not necessarily pumping as I wanted it to, I decided to just go ahead and make this a very easy target, minimizing my risks, which would have came out to um, so this is about a 2-to-1 risk to reward. And again, closed out my trade right here with the overall target being at this previous day's high. Could have let it rant, but you know me, I'm a profit is profit type of guy. And I'm just gonna take the easy target and call it a day because again, this is an account where 1% is enough, right? So close to $600 on the day. This was the setup that we took. Again, it took a lot of time, but as you guys can see, patience definitely paid. And yeah, this was just the breakdown of today's case study on the S&P 500. If you guys have any questions, of course, reach out to me. I will leave all my links to all my socials below. And yeah, leave a comment, like, share, subscribe. And yeah, I'll see you guys on the next video.